Monday, August 18th, and big show. Got a couple of things. Catalyst Watch. We'll go over that for this week. The difference between QQQ and QQQM. You may not know the difference, so I went to AI and asked it. We will go over Spotify. It's what you're probably listening to me on because Spotify is my largest audience by far. It's back. Shay gives you a great look at three of his stocks. Dan Ives updates his ETF. We'll go over some educational stuff. And then we'll go over earnings and the scan. So it's going to be a jam-packed show. There's going to be some rants in here. There's going to be some good stuff. Let's talk about what I did Friday. Okay? This is Friday. And I talk to you about this all the time. Alpha picks, okay? And for some reason the captions say PIX alpha picks, but it's alpha picks. And we got a new pick on Friday. And what is alpha picks, you may ask? Well, it's a data-driven portfolio of stocks that has tripled the S&P since it was founded, okay? It alerts you when to sell, and you get a buy on the 1st and the 15th. We got a new one on Friday. And I've said this before. You can take that, and there are some rules around it, but you can take the pick at 12 p.m. Eastern on the 1st and the 15th, and if it's a small cap name, you can scalp it for up to 10%, and it's been done several times over the last few months. The key is it's got to be a small cap stock. This was a larger cap stock, but it was also a top 2025 or a top 20 second half 2025. I'm not sure which, but it was a top stock. So rather than scalp it, I bought a ton of it. It seemed to be leveling off. I got it in a good price. I'm decent. I'm up a couple of percent, but I bought a ton of it. So if you want to see that, this is 28 minutes. You play it on double speed. Just play it on double speed because you'll see exactly how I do this. Now, you don't see my chart. You don't see the pick. You don't see anything, but I walk you through exactly what I did. There were hundreds of people there with me. So again, if you want to see it, it's at the newsletter. And the newsletter is free. Everything that you see, every link that you need is at Linktree, linktr.ee/dailystockpick, okay? You can get everything here. But this particular thing, it's free. Just go and watch it. And if you want to see alpha pick stuff and how you can pay back your yearly subscription, just go and watch that one. Now, I will tell you, I have started using the notes section of Seeking Alpha Premium. And so you see my portfolio over here. This was a game changer for me this weekend. The notes section, if you pull up a stock like Apple, okay, and you just see it, you can literally, when it's in your portfolio, when it's in there, you can put notes in. Now, I don't think I have any notes on Apple because it doesn't bring me up here. Does this bring me to my notes? No. But over here in the portfolio, yeah, you can add notes. So if you have it here, just go over here to SSK. I think, yeah, TLS, I think I put a note in here. Top stock when I looked at NBS trading at $5.68 when added on 8/15. It's a trading note. I've got TLS in there as a top stock. And it's on 8/15, so I was doing work on Friday. It's in there. This I like better than Savvy Trader because it's easy for me. Whenever I go to TLS in that portfolio, I can see my notes right up here. Look, my notes. View all my notes. And you can go in there and do it. It's a game changer. Start using it. Use the tools that you have. Most of my listeners probably have Seeking Alpha just based on the amount of stuff. Now, if you don't have Seeking Alpha, you can get it, okay? There's a couple of ways that you get this. I just talked about Alpha Picks. Seeking Alpha Premium and Alpha Picks, it's a bundle. You save $160 when you get them together. So not only can you import your portfolio here and then add notes for when you trade them, what your thoughts are on them, and outline them by date, but then you get Alpha Picks as well. And it's tripled the S&P since it was started. So you get both of those tools, and we'll go over everything. But I like it. My plan going forward is to move my trading journal from Savvy Trader over to Seeking Alpha. I thought it was interesting because I was doing it a lot this weekend. Now, let's talk about margin expansion and what we're seeing in this quarter. This quarter, I think it's 80% of the earnings are beating. That's really good. We're seeing really good earnings. So this one, Ryan says, businesses are eating 64% of tariffs right now. The tariffs were expected to drive inflation. But what you're seeing is businesses eating those and saying, you know what, we're not raising prices because we'll get called out by the White House. We'll get some bad social media. So maybe they're going to do it slowly. But according to Goldman, by this October, this will drop to only 8%. So 64% of the companies that are eating it today, they won't be eating it. It will go down to 8%. Okay? This is the Goldman Sachs research that Trump ranted about. Ranted. He hates Goldman Sachs now. And he called him. He said, you're wrong. Well, when your costs go up, and that's what we saw with PPI, when your costs go up, you're going to raise prices. Now, is it going to be immediate? No. But is it going to happen next quarter? What we're going to see is perhaps the margin expansion. Because remember what margin is. Margin is the difference between the price you pay and the cost to the actual to the company. So, or business, whatever. Again, margin is what the actual profit is. So if these tariffs are going to eat into their cost, that's what you're going to see. And margins right now have been really, really good. So let's talk about this week, because this is Catalyst Watch. This is the greatest email that comes out as part of Seeking Alpha on Friday. You can set your entire week up. Open Door and Tilray are going to have crazy volatility. Okay, earnings watch. Main one, Palo Alto, which reports after the bell tonight. We're going to go over that one. Fabrinet. There's a bunch of others that report. Dividend watch. You got Win, you got Applied Materials, and you got Microsoft. Lucid Group will conduct a special meeting. Saito Royalties holders will hold a vote on Viper Energy. My buddy owns Viper Energy. He was talking to me about it this weekend. So, again, Palo Alto Network reports after the bell tonight. That's going to be a big one that we'll talk. Tuesday, you've got Home Depot, you got XPEV, and you got Viking. Okay, you got companies participating in closely watched Enron. Enercom, Denver Energy. I mean, it's Oklo. You love Oklo. Wednesday, you got earnings watch. This is a big one. Target, Lowe's, Baidu, TJX, Estee Lauder, which has been beaten down and come back. 1 p.m. Google will hold a Pixel event. They're going to basically put all of their AI on the Pixel phone. This is going to be big. This is beating Apple to the punch. And that's Google. That's why I hold it. 2 p.m. Federal Reserve will release the minutes of their last meeting. It's going to be big. Thursday is the big day this week. That's what's Jackson Hole. Powell will be speaking at Jackson Hole. You've got earnings from Walmart, Intuit, and Workday and Ross Stores. But this will be a big one. And the reason Jackson Hole is so big, we want to know what Jerome Powell's going to say. If he indicates that they are likely to reduce rates, you're going to see probably a very big rally in the markets. If he just ignores it, you might see the market pull back a little bit. Disney, they'll release their ESPN direct-to-consumer streaming service. Foot Locker will hold an extraordinary shareholders meeting to vote on the proposed merger with Dick's. Might be good. Friday, notable earnings due to report BJ's. Dick's isn't reporting, but BJ's is. Just so you know, I love that joke. And Friday, Jerome Powell will give a highly anticipated speech in Jackson Hole focusing on the economic outlook. So again, Jackson Hole Thursday and Friday, it's going to be a big, big thing. Now, I was doing some looking this weekend and some rebalancing in my portfolio. And so I if you didn't know, there are two ETFs, okay? When I talk about QQQ, there is a new one that came out that is the exact same damn ETF, okay? But it's got lower fees. And so it's QQQM. And the only reason the difference is there's no difference in the holdings. It's slightly different. It performs exactly the same. But this one, just doesn't have the history of QQQ. And I know that the fees, let's see if QQQ, let's edit symbols. And I'm going to compare these two, QQQM with QQQ. Okay, because the difference is marginal at best. And I wanted to know, should I be buying QQQ or QQQM? Well, look, it's a blue line and an orange line. Do you see a difference? You don't. But the expense ratio, 0.15 for QQQM, 0.20 for QQQ. And you go down and they're listed the same. The trading wise, the difference, return, dividends, QQQM gives you a 0.52% yield, whereas QQQ gives you 0.49 yield. Okay, dividend growth over the years. And again, QQQM looks like it's a little better. The 3-month performance, the 7-month, it's all the same. So I didn't go on the internet and say, oh my God, let me see exactly what people think. I went to AI. I went to Perplexity and I said, can you tell me, like I'm a 15-year-old, what the difference between QQQ and QQQM is? If I buy and hold $100,000 of each for 5 years, has there been a difference in returns? Well, yeah. I thought this was interesting. And so when I said to it, what is the tax difference? Please explain. They said there was a tax difference. Please explain if there's a difference if I hold it in my brokerage versus IRA. And it gave me that information. And so what I learned from this bottom line, for most young long-term investors, QQQM is a slightly better choice in taxable accounts because it's built for low taxes. But in any IRA, there's really no tax-based reason to choose one over the other. And again, I used AI. You need to use the tools that you have available to you. I will put this in the newsletter. So if you're interested in the two, because you've got QQQ in your brokerage portfolio, but we know you're just buying and holding, and QQQM is a better tax efficient vehicle, maybe you want to think about that. But again, in your IRA and your retirement stuff, there's no difference. And again, I just used AI. Now, let's talk about where you're probably listening to me on, and that's Spotify. And so I got a question. When they released earnings and you saw this drop, and I got a question. Should I be selling because their earnings were so bad? I'm going to pull this out, remove this segment. And they gapped down here. And I said, it was a listener. I said, I don't know. I don't know your risk tolerance. I don't know exactly where you are. But if you use Spotify, I think you should keep it. I don't know what this particular person did. I don't particularly care what this person did. I know what I did. I held. Now, would it have been good to get out here with a 28% gain and then not buy these other two that were losers and then just buy this one? Yeah. The market will do that to you. It will get, the hindsight is perfect. You can figure out the best strategy ever. But I didn't get out. I just held. Now, am I holding still? Absolutely. Want to know why? It's a long-term buy and hold for me. And so I identified back here in February, that 617 right there. That's a previous all-time high where it pulled back to. Okay? The indicators, MACD, it didn't reset. But this is one where if you're going to get nervous, QQQ or VOO probably is a better bet. But you're going to have to deal with those huge fluctuations in a stock like Spotify. It's an expensive stock. And when they announce that their users may be coming down, it's going to get a pullback. But you can see the growth, 14% revenue year over year, 166 EBITDA growth year over year. Profitability, they're doing okay. It's a B plus. 31% gross profit margin. They don't have as much pricing power because, again, Apple Music is their main competitor. I think Apple Music sucks. I'm an Apple fan. I think Apple Music sucks compared to Spotify. I like Spotify. Momentum, it's been great. You held this for 1 year, you're up 118%. Do I think it will be up 118% again? I don't think so, but I'm willing to hold on to it. Again, you have to know what you hold. You have to know why you're holding it. Make the notes. Don't ask somebody on the internet who may have millions of dollars and may be much more successful than you. What should I do? Because they aren't going to tell you. If you need a financial advisor, get a financial advisor. I don't have one. I don't want one. I held Spotify. Could I have been wrong? Absolutely. You could have pulled back down here to 500. But again, know what you're holding, know why you're holding it, and put those notes in Seeking Alpha. Now, this was just a masterclass. This is Shay going off. And this is his rant. His rant about Cloudflare, symbol is NET, about Palantir, and about AXON. It's just, again, are these on your list? You need to have a list as we're at all-time highs and we're moving towards all-time highs. And it's getting shaky. It's getting nerve-wracking. But again, are any of these names on your list? Because Shay says on the dip, you should be buying these. It's a great, again, this is if you're interested in just the actual thesis of buying into these stocks, listen to this podcast. It's a great podcast with Logical, with Sam, and with Shay. They do a great job. Now, maybe Dan Ives is more your take because you like colorful shirts and stuff. He just updated his AI 30 watch list. Okay, he added CrowdStrike, Roblox, G Vernova, and Nebius, which is one that I love. He removed C3 AI, CyberArk, which Palo Alto is planning on buying, Adobe, and Elastic. Okay, but he's got it all laid out for you on Twitter. If you're not a Seeking Alpha subscriber, don't think I'm just bringing it up for the paid stuff. No, you can follow this stuff on Twitter as well. But he updated his list. Are these on your watch list? Because you absolutely should have a watch list. And as the market pulls back 4 or 5%, or the stock pulls back 4 or 5%, start adding because earnings were good. We're still in a bull market. Make no mistake. You go to a weekly chart, we are still in a bull market. We have not broken anything. And your indicators are super extended. Do you want to wait or do you want to buy now? Because I got a question about Alpha Picks. Should I buy when the market's at an all-time high? Well, for Alpha Picks, the return, it's just like QQQ. If you bought here at all-time highs, November 2021, at 400, say, at 400, you had to endure the downturn. Now with Alpha Picks, if this were an Alpha Picks portfolio look, it's the same thing. Are you happy? You know what? 2 years later? Yeah, you're happy. But you had to do that downturn. So again, when you buy, don't try and time the market because you can't do it. If you have the ability to go in, you can dollar cost average your way in. But the actual smart money is buying when they have money. Identify your watch list, identify your plan, identify the strategy that you want to use. And Sam, one of the Investing with the Boys guy, why are crypto miners suddenly an AI play? Why are crypto miners too hot? Sam is dead on with his thing. Now, expect any of these names. IREN, Wolf, Hut, Mara, Riot, Cypher, CORZ, forget which one that is. But again, expect volatility. I'm currently in one of these names that the paid subscribers know that I'm in. I am currently in one of these names. I am up 10%. The theory, I am waiting for earnings to come through. I like the particular name I picked. I like it. Nebius, remember, was up 50% on their freaking earnings. It was a great earnings quarter. Again, these are crypto miners. They have moved from being just crypto miners to other services. So I like it. Now, let's get into this. We're at all-time highs, and you will see some crazy moves in some crazy stocks. Beware of things like this These are lower quality stocks. You listen to me. You know how to do your research. You know what the market cap of a company is. You know what the revenues are in relation to that market cap of a company. You can use AI to ask about the companies. But investors lost billions of dollars on certain U.S. listed Chinese stocks that tanked soon after being promoted on social media. This is a Financial Times investigation. They even mentioned Regenicell, Bioscience, RGC. RGC surged 10,000% year to date. Let's just go and look at this one, okay? I'm not saying that RGC is one of these junk companies, but you've got to know exactly what you're investing in. RGC is up 9,992%. It is crazy. Seeking Alpha Analysts, you can read their analysis as soon as Wednesday, June 18th, right there. This particular Atticus analysis went over it, and it's a strong sell. Now, is it a stock that you want to buy? Well, let's look at it. The market cap, $6.49 billion. Let's look at the financials. Do they have any revenue? No. They have no revenue. Is it one you want to trade? Well, let's go over to TrendSpider and let's look at RGC. Is there a strategy that makes us money? Well, the 4-hour algorithm over the last 31 months, because it's only been out 31 months, trades 27%, 27 times. You make 334% versus buying and holding 1,614. I would say that doesn't trade well. It just doesn't. I mean, when it makes you that little bit, again, I'm going to pull this one out, remove this segment. But when it trades that, you look at it and it wins 22% of the time. Now, maybe a 1-hour strategy. Let's look over the last 60 days. Because there's a 1-hour strategy? No, it loses you money. Maybe a 65-minute works on this one. Again, I would identify this as a trade, not an investment. And that's why I'm looking at it. And so far, I don't see any strategy that I absolutely love in this. So I wouldn't be in it. Just understand, penny stocks like this, you have to know what you're investing in. And if you're going to trade them, then you trade them. Don't hold on to your losers. I had someone ask me if it's a good idea to invest. Every now and then I'll get people asking me, is it a good idea to invest in this company? I just had Airbnb was one that I got questioned about purely because they had a good experience with Airbnb and Turo, which was that. They said, oh, I like this experience. Would you invest in these companies? For the most part, understand that's what I do. And that's what Chris Camillo does. Okay. We find a good product that we like, and then you do the research. It is fine to go into a stock simply because you like it. I went into Pepsi years ago because I liked it, because I drink it every day. That was it. Now, did I cut Pepsi during this entire time? No, I just sold it. I just literally sold it. But if you look at Pepsi over this time, it's been a good stock. Hasn't been bad. So it's okay to invest like that. Go ahead and do it. You will make mistakes. I get asked all the time, hey, can you go over this stock, XYZ stock? Or can you go over a sector like industrials? I haven't done this for a while. And there's two main reasons for this. A, the tools are out there for you personally to look at everything that I look at. You may not know everything I know. But learning to invest is about making mistakes. It's not about someone else's opinion. It's about the share price. You need to make mistakes to learn. So if you ask me, hey, is this a good stock? I will simply ask you back, what do you think of it? And the reality is that anything you ask me about a stock and the 5 minutes that I go and do research, or maybe even 30 seconds that I use Seeking Alpha and TrendSpider to look at this stuff, that should not affect what you think about a stock. It's the facts that should affect what you think. AI Go and ask AI. They will likely give you a far better answer than I can ever get you. So again, don't think that I'm being a douche by saying, no, I'm not going to go over it. It's just, I think AI changed the game over the last 2 years, whereas it is a better financial advisor than I can ever be. And I also think that people who ask me to go over a stock are asking for confirmation. And they're asking, is it a good thing that I get into this? And they want me to say yes or no. And that's not the way the market works, because I don't make the decisions. It's the market that makes the decision. And if you are really affected by my opinion on something, I would say you're better off doing VOO and QQQ and chill. Because if you're not willing to do that research into an individual stock yourself and understand what the PE is, understand what the earnings are, understand what the revenue is, or even have a discussion with AI and say, I'm thinking of buying this stock. I'm 15 years old. Can you tell me, as a 55-year-old Wall Street analyst, if that's a good idea? And have a discussion. It's a one-on-one thing. So when I don't go over particular stocks, that's the reason I think you're being lazy, because the tools are out there right now for you to do it, and you don't need to pay for the tools. Don't come at me and say, yeah, but you're selling tools. No, Perplexity is free. You saw me use it with QQQ and QQQM. You need to understand your own risk reward and your own risk tolerance. And that needs to be learned through mistakes. You may win during the entire time, but you need to learn through your mistakes. So please don't understand that when I say, no, I'm not going to go over this stuff, that's the reason. If you come at me with a great, and I brought up several stocks in the past 2 weeks where people asked me about a stock, I didn't write them back a particular thing. I didn't credit them with, okay, this person asked me, but good God, it was a great pick. And I've invested and I've traded and I've won. So I urge you to give me a better pitch than, hey, can you go over this? No. The reason is you should go over it and then tell me why you like it. And then if I go over it or not, you should be buying that stock if you think it's a good risk reward. So one thing that I love about Seeking Alpha Premium is that I can import my portfolio. Okay. I love Earnings Hub. I love the earnings calendar that you see here on the left. But any stock that I own, any stock that I have in a portfolio or a watch list, okay, it comes up with on my stock earnings. And I love this because, like, for instance, FINV, that ain't on any popular list. It's a $2.2 billion market cap. That ain't going to show up on anything. You know, again, I like this because some of these smaller stocks that I own, some of these players, some of the trades that I do, it's on watch list. And so I know when their earnings are coming up. There are several that are on this list that I want to hold through earnings. There are several on this list that I want to sell into earnings. But I'm making that decision, and I love Seeking Alpha for that. I just thought I'd bring that up. And this week, most of the big names happen before the bell. If we just pull up Earnings Hub, and again, this is a free site. Earnings Hub is a free site. So if you don't have Seeking Alpha Premium, go to Earnings Hub. And you can see all of the big earnings, the popular earnings, are happening before the bell this week. Okay? Except for Thursday. You've got Intuit, you've got Zoom, you've got Workday, and you've got Raw Stores. And today, Palo Alto Networks. Let's just look at it here. You got an earnings per share estimate of 73 cents. Last earnings per share was 80 cents. Okay? It's after the bell today. Q4. Likely to set the stage for growth in fiscal 26. Remember, Palo Alto Networks is the largest. If you want to read what Dan Ives said about this in Webbush, go and look at it. But this is the largest cybersecurity company out there, and it has done nothing for quite a while. Nothing. If you bought back here in February 2024, and I am holding this stock, full disclosure, I am holding. I have not traded this one. I should have. Because if you bought back here in February 2024 at 188, again, that's a year and a half later in a bull market. You are negative right now. You are negative right now. This earnings could affect this stock big on the downside or the upside. Right now, you're trading on the bottom line below the 50-day. The Bollinger Bands have cinched up, but they're kind of expanded. The MACD on this weekly is down at the oscillator. The RSI is at 45. Buyers need to show up, but if they report something bad after the bell, expect this one to come back to this 200-day. And by the way, if this comes anywhere near 150, good God, that's a great buy. Okay, right now, it's the quant still has this as a hold, and it's been a hold forever. Now, Wall Street thinks it's worth $212. I have said to myself, and I have an alert, if this gets to $200, I'm trimming it. Why? Because if you look at this one versus CrowdStrike, and that's where I bought into CrowdStrike specifically for this reason. CrowdStrike is the grower. You hear, in porn movies, it's the grower and the shower, whatever it is. But again, look at CrowdStrike versus Palo Alto. Over 1 year, Palo Alto's up 3%. CrowdStrike's up 60%. 3 years, CrowdStrike is up 116%. Palo Alto's up 104%. Again, Palo Alto for 3 years, you're fine. But had you just made that switch like a year ago, you would be making more. And I bought into CrowdStrike for that reason. Now, next week on earnings, that's what's going to move the market. If we go to Earnings Hub and we look, it's not this week, it is next week. Because look at these earnings. Wednesday, you've got NVIDIA, you've got CrowdStrike, you've got Snowflake, you've got HPQ, you've got everything next week. This week is all about Jackson Hole. So while today Palo Alto may move the markets a little, I think it's going to move cybersecurity stocks much more. Next week, you're going to see the market actually move. And that's what's big. That's where you have to know exactly what you're invested in, and you have to be comfortable holding that at all-time highs. So let's talk about some scans, because again, TrendSpider, it is all about scans. Is natural gas getting ready for a move? We just got an entry here in Boyle at 31. Could natural gas go up? Well, right now it's down 3%. This is a triple leveraged ETF on natural gas. Understand, BOIL and KOLD, those are inverse. We just got a Boyle entry. If you were to look at the inverse one, which is the short version, you are in at 27. And you're at 36. This one has been a far better trade. It's been better to bet on the reduction and the lowering of natural gas than the actual price increasing. That's the difference. That's how you trade these. And so you can see the 200 days moving, the 50 days moving. Is this one a great buy? Well, yeah, but it's a decaying asset. This is not one that you want to buy and hold. It is absolutely not. UCO and SCO are the same thing with oil. Go and do the research. Now, as far as energy goes, Diamondback Energy, 140. Okay, this one doesn't trade well on the 4-hour algorithm. Energy stocks have been just something that hasn't done well. And the reason is because Trump is bringing down energy prices by basically flooding the market. Now, if for some reason India decides to stop buying Russian oil for some unknown reason, or Russian oil is actually opened up, you're going to see energy stocks take a leg down because, again, energy is going to be cheaper. And that's Trump's goal. Snowflake. This is one that just got an entry in the 4-hour algorithm at 199. I've said it many, many times before. On the weekly chart, have we started using 200 as the support? It's trading at 198 because for going all the way back to 2022, 3 years, I was buying at the bottom of this and I was selling at the top. This was a clear strategy. And you sell at the bottom because at certain point in times, the market would just pump it. So I would buy under 150 and I would sell at around 200. And you got that opportunity once, twice, 3 times, 4 times, 5 times, 6 times. And I sold out at 200 here just back in June or July, somewhere in that neighborhood. I may have even sold back here in May. But again, it was getting in and out of those positions that helped me understand where your stock is trading. Right now, MACD's slightly above the oscillator. It's not historically above there, but we have seen it come down. The RSI, it's at 53. That's a weekly. Do you want to trade the 4-hour algorithm? Because over the last 2 years, the 4-hour algorithm makes you 63% versus buy and holding makes you 28%. You got a nice gap up here, and you've got earnings coming up next week, like we talked about. All of these scans will be in the newsletter. The newsletter is free. It's right here. You go over to Linktree, okay? And it's like the 5th one down. It's free for you to subscribe to. It has all my notes. It has all the charts. It has everything that I use to put this show together. Now, it also has TrendSpider. This is the tool that I use, the charting program that I use. This is the one that I use to trade. This is the one that I use for strategy. This is the one that I use for all my technical knowledge. Okay? Seeking Alpha has technicals in it. It doesn't have this kind of technicals. And it's on sale, $50 a month. Now, if you can't make $50 a month trading and using this, A, you probably don't have a large enough account and you shouldn't get TrendSpider. Or B, you're not using the tool the way it's meant to be used. This is a technical tool. So it gets you in based on technicals, whether you hold the stock or not. That's the fundamentals. So understand the difference. And I talked about the bundle already. I talked about scalping alpha picks, how that's on the newsletter right here at the top. Get the bundle. You've seen me use all the tools to try and find out, okay, what's better? Is CrowdStrike or Palo Alto better? So again, use those tools the way that you have them. If you have any questions, hit me up because on Linktree, there's my email address as well as all the socials. And get Webull. Webull is my trading platform. That's where I took $1,000 and turned it into, I think it was $14,000 last week. It's down to $13,700. But you can get Webull. Or you can get Robinhood. Just get a trading account. Fidelity is where I hold my large portfolio. I just feel comfortable with it. I don't like my large portfolio in Webull or Robinhood. Other people do. But again, it's all here on Linktree. So if you have any questions, hit me up. Okay, I'll talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.